My name is Kim Coleman, and I have the pleasure of working with Cindy Wylie today. Cindy has over 30 years of experience in financial services industry. She is a certified divorce financial analyst, a CDFA, and a certified financial planner, a CFP, specializing in guiding women through the intricate financial landscape of divorce. Hey, Cindy, how do you handle life insurance when you're going through divorce?
Yeah. You know, if you think about it, the largest asset is typically not life insurance. The largest asset is typically going to be, someone's home or their 401k, retirement assets. But life insurance can have a value, and it should be on the balance sheet. It should be determined as part of the marital balance sheet. And there's different types of life insurance. So as you know, you're in this business,
yes.
So you're very familiar. But obviously, term insurance has no cash value. But whole life insurance, variable life insurance, flexible premium adjustable life or universal life, they have a cash value. And in some cases, and I have clients that have a large amount of cash value in their life insurance policies. So that cash value, how it's typically handled is you can split that cash value, but that's typically not the best way to do it, because what happens is, as you know, the benefits of the policy change. So the death benefit would change.
Right.
So typically what they do in a divorce case is they just offset that cash value, 50% of that cash value with another asset. So I think that's really important to understand that, because it can change the policy and there could be tax implications if they cash the policy out, and they lose that life insurance benefit if they cash that policy out. While they can go get a new policy, then you're dealing with a new age and medical requirements. The other thing I want to mention about life insurance, and this is important, if someone is receiving alimony or child support or any kind of spousal maintenance or spousal support, if you think about that, if they're getting that income, maybe they're getting that income over several years. What if the spouse, the ex, that's paying that support dies? Now that support is going to end, and the person that was receiving it has to figure out how they're going to function, right? How they're going to be able to pay their bills and take care of their family. So it's really important that the person that's paying the support maintains life insurance. The other important point of that is you got to make sure who's the owner and who's the beneficiary.
Right.
So if the spouse receiving the maintenance is the beneficiary, but the ex is the owner, the ex, let's assume you're divorcing, your ex is the owner. Your ex can change the beneficiary from you. So when your ex passes away, it goes to that other person, and you're not getting that lump sum of money to help with the support that you were getting. So it's important that that you would become the owner of the policy, so that you can control the policy, you can control the beneficiary, you be the owner and the beneficiary, and in some cases you can make the premium as well. Make sure the premium's paid and the policy is not canceled, because the owner, regardless of what the divorce decree says, that owner has all the rights to change beneficiaries, to do whatever, that cancel the policy, take whatever they want to do. So it's really important.
You're right.
Yep. Yeah, thank you.
You're welcome.